guide you and, help you out.
Yeah, and so as you're walking through the process, it's definitely a partnership that you develop with your real estate agent and real estate professional that helps you navigate it. And some people get stressed out in the process, and I tell them ahead of time, that's what I'm here for. Because I do this for a living, I am able to see beyond what you can see. I actually see the end of the road ahead of you. So you've got to be patient with the process and trust the process, right? Now, as a lender, I know the underwriting asks for a lot of information too. So once you're under contract, please be prepared to provide all the necessary documentation back to the underwriting team and the loan processor. They're going to walk you through that. And I've had buyers get really frustrated with that process, but it's necessary based on the federal guidelines that lender has to follow in order to make sure that your loan is compliant. And we don't fall into what we formerly known as the 2008 crisis, where we had mortgage lenders doing things that put people in a position to lose their home. So it's for your protection that they're doing that, and also because it makes them compliant with the federal government guidelines for lending. So Trent, do you want to talk a little bit about that? Because that is where I see the most frustration for buyers, is that underwriting process once we're under contract and they're being asked for lots and lots of financial information and to confirm, their spending habits, etc. And I don't want to forget, believe me, I have not forgotten. I still have my 10 commandments of what not to do once you go on the contract. And I'm going to talk through what those are, but let Trent talk to us a little bit about that process, the underwriting process.
Yeah, that's good. I just wanted to jump in real quick. That's good because back in 2008, there was so much of what's known as predatory lending. Like, just write down how much you make. You don't have to prove it. It's crazy. So again, don't get frustrated. Just do whatever you need to do and just provide whatever you need to provide. Go ahead, Trent.
Yeah, I think it starts with, again, a good lender is going to want to pre-approve you, not pre-qualify you. And we really need three things, very simple things. We need last 2 pay statements if you're employed. So that's one. We need last 2 years of W-2s or tax returns. That's the second thing. And then we need third, your two most recent months of bank statements, just to qualify you on assets and whatever you're saying that you have to close on the home. As long as you provide those 3 things up front, we can give you a pre-approval that actually means something, is solid, and you're going to have a lot less issues further on during the underwriting process. And typically the only thing that the processors should be asking, or the loan associates should be asking once you go into contract, they want to know you to sign the appraisal acknowledgement, acknowledging the value of the home, you to acknowledge the application and the loan estimate, you to update the pay statements as they come in, the bank statements as they come in, and then we're sending out the closing disclosures. It shouldn't be a complicated process if we have a very clean start. But as you know, life happens, and people may go out and go buy a car during the process, which we discourage. To keep it simple, we discourage any new debt, any other credit pulls. But it's a very simple process. If we start clean, we end clean, and you're communicating with the lender during the process. And you want your lender to be in tandem with your realtor, to really be communicating with them, letting them know what's going on. So as Natasha mentioned, we're a couple of steps ahead. We see what the problems that could potentially happen. We see how quickly we can move on things. So as long as everybody's in full communication, a lot of that eliminates a lot of problems that could potentially happen.
So, and Trent, that was a good segue, because I send my buyers a video and a text message and a document that says, here are the 10 commandments for financing home. Thou shalt not change jobs, become self-employed, or quit your job after you go on the contract. Thou shalt not buy a new car, van, or truck. You will end up living in it. Thou shalt not use charge cards excessively and let your accounts fall behind. Thou shalt not spend money you have set aside for closing. Thou shalt not omit debt or liabilities from your loan application. Thou shalt not buy any furniture, even if the payment is deferred until after closing. Thou shalt not allow any inquiries to your credit except for insurance purposes. Thou shalt not make any large deposits without first checking with your loan officer. Thou shalt not change bank accounts or open or close credit card accounts. And thou shalt not co-sign a loan for anyone. If you have any questions or recently broke a commandment, please email or call your lender or myself.
Oh my God, that's funny.
So I have it on a scroll and I send it to all my buyers because I have had situations go, why did you do that? We went through the thou shall nots, right? Did you forget that first email I sent to you? Congratulations, we're under contract. Here are the things you will not do. Because we want to make sure we make it to the closing table successfully. And I do make light of it, but honestly, I have had buyers, and I know Trent, you've had buyers break some of those thou shall nots, and it has potentially jeopardized them from actually purchasing a home. And I've seen instances where they have not been able to close in a home and lose their earnest money deposit because they did not follow those instructions as needed, where I recently saw a situation, one of my mentees called me and said, oh my gosh, my buyer just went out and bought a car. I was like, really?
Oh man.
Why
Wow.
did they do that?
Yeah.
So try to talk a little bit about that.
Well, everyone on this call isn't going to do that. So
Nobody on this
if
call.
yeah, if they follow those commandments, we're in really good shape. And it's humans, we tend to overcomplicate things more than we should. But if you, as I mentioned, if you start clean, get those 3 things to us, you communicate as things are going along. Hey, you can talk to me about anything. I don't mind. So if you want, you say, hey Trent, I'm gonna the Beyonce concert is coming up and I want to put these tickets on my card. I'm going to say, well, how much is your limit? Let's talk. It's not a no, but we'll talk you through everything and how to make things happen for you, because we don't, we got to live too, but it's just the way we go about it. Just open communication, and avoid all of those issues that Natasha mentioned, because they become issues when they happen, but we can avoid all of that by just starting clean and ending clean.
And those 30 to 45 days under contract can go really quickly. And so restricting yourself during that time is beneficial, it's not for my sake, it's for yours, because you want it to go as smoothly and as stress-free as possible. So once we've concluded all of that, then we move what's called to the closing table, right? We do our final walkthrough of the property, and then we're able to close successfully. And that's the fun day where you get the keys to your property. And I know we as real estate agents celebrate that day because we've helped you navigate any roadblocks, issues, and navigate successfully to a successful close. And it's always a delightful day for the agent, for the loan officer, for everyone involved, but more importantly for you, to see you accomplish and achieve the goals that you have set out for you to achieve.
100%.
Yep. I approve this message. Yeah, so many things to know, but you have to keep close to your realtor. You got to keep close. Be honest with your loan officer, because we are here to serve you. We're here to serve you. So don't feel embarrassed about, well, I didn't. Just tell the truth, and it makes it a lot cleaner, a lot easier to walk you through the process. Because especially Trent, when you're doing these loans for people, okay, well, maybe we can't get you this loan. Let's look at something else. Let's take another avenue. So don't close the door on your choices. And at the end of the day, you don't know, and I'm talking as a consumer, you don't know what you don't know. So when you get in front of, I'm sorry, go ahead.
Yeah, you don't know what you don't know. And we also don't want to make decisions for you. We want to present your options to you in a concise way, so you can hopefully easily make a decision for you, and it's the best decision for you and or your family. Our goal is to empower, at least my goal is, and we want to see you win. Like, even if it's not me, if you guys want to move forward and you got this lender that you know and they're awesome, call me. I'll talk to them and ask them questions for you off of the strength of Natasha and Nabia, and to ensure that you all are in good hands. It's enough for everybody out here. So, we definitely have our field. We love to work with more people, but I just want to see all of y'all win. And that's the thing, because it's a great feeling to own your own home. So
Yes, absolutely. Yes, Natasha.
No, I was just drinking or sipping on water and saying, yes, absolutely. Well, let's just get the process started. So if you're looking and you're ready to move to Florida, connect with Nabia today. We would love to help you get started on the process of home ownership right there in sunny Florida, taking advantage of the fabulous weather, the tax benefits, etc. Connect with her today. Connect with Trent to get your pre-approval started. We want to get you on this start on the process to home ownership today. A lot of people procrastinate and they're always putting things off till tomorrow, and you don't know what tomorrow holds, and you want to take advantage of what's available to you. This opportunity has been brought to you, and we want to help you achieve and accomplish the goals that you want to accomplish. And of course, if you have any questions, we're here to answer it. And Nabia, are you going to open it up for questions or?
Yeah, I'm going to open it up, do some Q&A if anybody has any questions. And even if you're not considering moving to Florida, which you should, because, here we just get a tan without even trying because it's so hot. Um, but yeah, for my light-skinned folks, my light-skinned folks. Uh, So yeah, it's beautiful here, but perhaps in your state, maybe you've seen something over there you might want to, you might be interested in. So we don't want to just limit it to Florida, even though, I would be hurt and wounded if you don't come and be with me.
I'll come visit.
Yeah, you can grow your own fruits and vegetables right in your backyard. It's a beautiful thing. It's a beautiful thing. But I'm gonna open it up for Q&A right now. If anybody has any questions, if you're thinking about it, please don't be shy because I will come for you in the comments. So, all right, anybody have any questions? Anybody have anything that they're thinking about mulling around? And even if you're a professional on here, if you have a question, please ask. This is the time to do it. We, as I said at the top of this, we want to be a resource for you. And if we don't have it ourselves, we can certainly point you in the right direction in your city and or state. So anybody have anything? Shirley Flowers. You have anything, ma'am? Or Erica? I know Janice had a question about,
Yep, sure did.
yes, ma'am. Go ahead.
You was all in my mind.
Yeah.
I really I want to purchase the home that I'm actually renting. And I actually spoke with Nabia already, and she has connected me with someone on her team. And so I'm excited about that. But I do have I never thought about the appraisal or inspection or whatever it is. And that was really good that you all brought that up. I love your 10 commandments, by the way, Natasha, because I'm not in real estate, but believe it or not, I think since probably maybe 20, 30 years ago, I had started thinking about buying a house. So I've been through a couple of different home buying programs, um, but it just never happened. So this is, I think, the divine time for me now. I'm a little older, so I'm a little more stable in my thinking and not just, but I do have a question. How do you determine the amount you can afford to pay based on a combined income? Like, what if one person's working and the other person's not?
Yep. So, for instance, let's say it could be your partner, it could be your spouse, it could be your
Mm-hmm.
child.
Mm-hmm. Oh,
If
okay.
that person is not um, contributing any income,
Mm-hmm.
unless you really want them on the loan, we typically recommend not bringing them on the loan
Okay.
because they may have liability. So now we can't count income, but then we're counting their liability. So we would start with one first. Um,
Okay.
but income is not only just your employment or your self-employment. You may have SSI, you may have disability, you may have some type of pension, retirement,
Okay.
child support. Those are all things that we can count as
Okay.
income. But each situation is very different. But we love to talk about it more. It's pretty much just think of it like this. Let's say that you make quick math if everybody's with me. Let's say you make $5,000, $60,000 a year. That's $5,000 a month,
Mm-hmm.
and you've got a $500 car payment and $300 in student loans,
Right.
and you want to purchase a home. Let's say the home is 250. The mortgage is going to be close to, just for the sake of math, 1,500. So now you have 2,300 in liabilities. That's the $500 car payment, $1,500 mortgage, $3,000, or excuse me, $300 payment. So
Mm-hmm.
that's 46%. Your debt to income is 46% of
Right.
your potential of your gross income. We look at
Okay.
gross, not net.
Got
And
it.
so from there, we would say if you're doing a conventional loan, your max back end is 49. We'd say, hey, you can afford this home. Now, do you want to pay that $1,500 a month? We would tweak scenarios for you on what your payment would be if this was the purchase price, so you and your realtor can strategize,
Mm-hmm.
or if you buy down the rate. So there's so many little buttons we can push to get you to where you want to be.
Mm-hmm.
um, but yeah, it, we can include other people. It's just there has to be a motivational factor for why you want
Okay.
to purchase a home with someone else, and it could be a domestic partner,
Right.
spouse, family member. It could even
Mm-hmm.
be a friend. We just need to
Mm-hmm.
understand why you're doing it.
Okay.
It's a great
Yeah. No, it
question.
would be my husband. I was just wondering, as far as the amount, the income, and you answered it. The debt ratio, or your
Yeah.
debt to income. I was just wondering, because it's amazing how you can pay rent, and a lot of times the rent is more than what the mortgage is, but then you
Yeah.
won't be qualified to buy the house.
Yeah.
And you're
100%.
still paying those same bills. You still paying your car notes, you still paying your school loans and all that, but then you won't be qualified
Yeah.
to
So
to pay the house, to buy a mortgage.
federally, they're looking into that and determining how Fannie Mae, Freddie Mac, and others, HUD, are looking into, is this the right way to qualify someone? So you're
Mm-hmm.
exactly right. You have
Mm-hmm.
individuals that may be paying $2,000 a month in rent, but
Mm-hmm.
actually can't qualify for an $1,800 payment. It's
Exactly.
counterintuitive. So I know that's being worked on. It's not, finalized now, but I tend to agree with you that, we just, your debt to income ratio isn't the only consideration that should be factored in right now. It just is. But, folks tend to come up with the money to pay for where they're living. So I agree with you 100%.
Yep. You do what you got to do, right? Okay, thank you. Now that's what I
It's my
wanted to
pleasure.
know.
Okay, did anybody else have a question? We're here. Say it now or forever hold your peace.
Wait a minute, I do have another question.
Okay.
What if I start the home buying process and come into a huge amount of money to where I don't have to get a loan? Would it be more beneficial to continue with my loan, or to pay for this house in cash?
That's an excellent question. So, um, you have to do what's best for you,
Okay.
and not what's best for the lender or someone else. One, we would want to understand like how you came into that money, because it may
Mm-hmm.
not be a situation where we could use it in terms of lending.
Mm-hmm.
Um, depending on what you have going on in your life, if you know, hey, I'm not a great manager of money, I'm buying somewhere where home values tend to appreciate. I'm going to store my money in that home, because you can always do a cash out refinance and pull some of the equity out. You can do a
Okay.
home equity line of credit. So
Hmm.
there's so many different things. You have to determine what's best for you.
Okay.
Maybe purchasing cash may be better. Inflation, a dollar today is worth less tomorrow, so just put it in
Hmm.
savings may not be
Hmm.
good, or you may want to invest it in something else and start a business. It just,
Right.
all of those things we can work with you on, and talk to you, and even refer you to wealth man people who can help make those type of decisions. But you got to take what the lender says with a grain of salt, because we have a vested interest in
Gotcha.
making a loan. But in
Yeah.
general, I would say you got to do what's best for you.
Okay. All right.
It's a
Thank
great
you.
question. And if you come into a bunch of money, remember
Hmm.
me.
Okay. I won't forget you. Trust me.
Oh, she going to Vegas. She going to Vegas or Atlantic City.
She's gonna
Look,
bet it
one of them.
all.
Look, one of
Let me find. Let me find
them.
out.
Yeah. Okay. This is great. Thank you, guys.
My
Okay,
pleasure.
it's our pleasure. All right. Did anybody else have a question? Y'all came on here, or y'all just, or it was just so good and so thorough that y'all just know everything. Is that it? Because I mean, all right. Yes. No. Well, Shirley already said she doesn't have any questions. Erica, do you have a question? Lincoln, do you have a question?
No, I don't have any questions.
Okay. Has it been helpful to you? Has this been helpful?
I don't like this.
Yes.
Okay. Awesome. All right. Good. Lincoln, you have any questions?
What's the advantage of paying cash?
Didn't somebody somewhere say cash is king?
No, I'm saying, like, say you say your what do you call it?
Mm-hmm.
Your credit is not great, but you actually have access to a lot of cash, and like you can afford to like buy anything from, say, 500,000, so say from a 300,000 to $500,000 house. What's the advantage of doing that? Because I
So
was thinking in terms of, I was thinking for my daughter and myself, and I was saying to her, I want to limit how much money we're spending monthly in mortgage, etc. And if we could bring that mortgage to zero, so I was wondering, what counseling would you have for someone who's thinking along those lines?
So I'll take this one, Nabia. So first off, let's talk about the advantages of purchasing cash. Cash purchases tend to be quick purchases. You don't have to go through the whole mortgage process, and you can tend to close, as soon as the attorney can draft it, you can close
Yes.
the doc. So within a week. So that's an advantage of a cash purchase. The second advantage of a cash purchase would tend to be the power to negotiate, because you can close quickly. Your financials are so strong, you would get a letter from a bank saying that this individual has the funds necessary to close all cash. So that's appealing to a seller, because they don't have to go through all of the things that a bank will require to ensure that, the appraisal amount, the inspections, make sure that there aren't any hazardous, history with the property, those type of things. So those are an advantage. But ultimately, it comes down to um, the individual and what they see, what they have a vision for, how they want to deploy that capital or that cash. I can tell you, we work with a lot of high net worth individuals, as well as individuals just starting out in the financial sphere. And most of those high net worth individuals are still using financing, especially when rates were lower. So you have to think about it in general. And I say in general, I want to make sure I say that is not always the case. If you could purchase a home at a 4%, 5% interest rate, and the S&P 500, just purchasing an index fund, has a return of 8% a year. So there's a 3% value arbitrage in that. So you financing, yeah, you have debt on that home and you're paying 5% in debt, but you could also deploy that capital in something as simple as an index fund. Whereas in general, that average return on investment is 8%. So even though you're paying debt, there's a 3% that you would actually be gaining. And then compounding that over 30 years, let's say that's the mortgage you get, that value versus what you're paying in interest is exponential. So most high net worth individuals that we deal with still tend to use debt because money is still relatively cheap. Interest rates are still at near historical lows. So I would say those are the advantages and disadvantages that come to mind.
Can you bargain down, say you see a house and they say, okay, it's going for 550,000, and you say, okay, I can buy this for 450,000. Can you talk them down? Is it usually possible to do that?
I'll leave that to the realtors to answer that one.
So that's where I'll take that one. So one of the things I'm passionate about is negotiation. I actually teach negotiation strategy to real estate agents. I am a master certified negotiation expert, and I'm also an instructor for the Negotiation Institute. So yes, you are able to negotiate the price. You have to look at what's your leverage point. What is the seller really looking for? There are things that factor. So a seasoned professional, or even someone that's new to the industry that has been trained in negotiation, will assess all the factors and actually help you, guide you through negotiating a deal that's win-win for both parties. So definitely with cash, you have more leverage, because then a lot of times cash buyers don't need an appraisal on the house. Sometimes they will make it subject to an appraisal. I have seen those. But many times, even the investors I'm dealing with that are purchasing cash are like, well, we don't even need an appraisal. We'll close in 7 to 10 business days. So, we make it a very quick, smooth process. And sellers love that because they don't have to deal with a lot of issues when it comes to that process. So there are some things that we consider when you're making a cash purchase that's different from financing, but you can use that as leverage to even make the price a little bit lower.
Okay, thank you.
That's awesome. Okay, we're about to wrap this up, everyone. And thank you so much for your questions. Thank you, Trent. Thank you, Natasha, for being here. Always a source of information. Always, always, always. And guys, if you have any other questions, please feel free to reach out to me and I will point you in the direction I need to. And if I can serve you myself, I would love to. Whether I am here in Florida, and I know, listen, I know people everywhere. I got you. All right, guys.